What's up, guys? Welcome back to Kryptonite, because I believe that cryptocurrency and the blockchain are the kryptonite of our modern financial system, and I love it. Guys, I know it has been a couple days since I have made one of these videos. I have been rather busy lately. I'm pretty much working 24/7. This is my current schedule typically. I wake up at 9 a.m. I hit the charts from at least 9 to 12 I'm in Florida, so that's sort of the start of the New York session, which would be 6 a.m. Pacific time, 9 a.m. Eastern time. So I'm from 9 to 12, sometimes around 1. I'm in the charts, and I'm looking for trades. Guys, I just won 2 trades in a row. I'm on a 2-trade win streak. Let's go. Woo! I will show you guys exactly how I was able to win those trades and kind of some new things I'm toying with as I'm trying to find and hone in on the strategies that work for me and my trading style. So we'll get into that. Other than that, right after I'm done with hitting the charts, I immediately go to work doing Instacart and Uber Eats, and I pretty much do that all night long until midnight. I come home, I eat my one meal a day, hang out, make a video with you guys, watch some my favorite shows, go to bed, wake up, do it again. That's my routine lately. My routine did change a little bit, though, because I did actually recently get this opportunity to go to this acting school. For those of you that know, I love to act. I've been acting since I was a kid, making videos. And I have done quite a number of different, commercials. I've been on a few movie sets. I've done modeling. I've done voiceover. I love to do everything in the acting world. I love it. So I actually got an opportunity to meet with acting agents and actually audition for them. So I actually auditioned with, my monologue was the monologue from, I think it's called Any Given Sunday, from, I think was it Al Pacino, who does does the speech to the football team, and I've always loved that speech. I love giving that speech. It's so reminiscent of my life and just fighting for every inch and just grinding every day, fighting for every inch, and that's what I do every day. When in a lot of different ways in my life, that I'm just always looking for that edge. So I got to perform that for some agents. Fingers crossed, I think I might have got signed by one. I hope so. So I'll keep you guys attuned as to that, because I do love to act. I would love to. My dream is to be doing Broadway musicals. I love to sing. I love to dance. I love to do acrobatics. So I'd love to be on stage in a musical. It's definitely my dream. As well as I would love to I'd love to be in a Vikings or Lord of the Rings type of show where I'm an elf, or I'm a dwarf, or a man, whatever you want to put me as, and I got a sword or a bow, and I'm living in that medieval style, riding horses. As a Viking, I could just grow my beard out super long and get super chiseled. So we'll see what happens with my acting career. But again, I think no matter how deep I get into acting, I think trading is 100% always going to be a part of my life. I love it too much. I love the analysis. No matter what, whenever I'm basically not doing something acting wise in the future, I'm going to be trading. I'm going to always find a way to work this in. So you don't have to worry about me losing my desire for trading. I think that's here to stay, and it's always going to be 100% a part of my life. Probably whenever I have time, I'm going to be doing this. So that is just a little life update for me. But let's get right into the charts, and then a little later on in the video, I'll show you guys the trades that I won. And I'm going to be honest, leading up to these 2 trade wins, I have been doing really bad. I was on a really bad streak, worse than I've done in a long time, and I just got so frustrated. But I was able to cut some losses, and I had enough mental discipline built up to go, Tim, just keep your account alive. Right? That was kind of basically what kind of really the catalyst of the downturn was. I decided to trade on the day of the merge. No, I tried to trade on the day where the CPI numbers came out. And there was one candle, I can probably find it in here, that was literally just so stupid. See if I can find it. Like this thing absolutely like destroyed me. I think this was the CPI number right here. This candle right here, right? Because we were kind of leading up to the CPI. We were kind of doing this, right? And then CPI number comes out, right? So then we have this huge, huge bullish move, right? Which breaks above this previous resistance, taking liquidity. So I actually took a short position and immediately, of course, came down, right? And so I immediately, exited that position pretty early. I wish I would have just held it, but it was going up and down, so it kind of freaked me out, right? It kind of messed with my psychology. So I was like, dude, if I don't take profit now, what if it just shoots up? You know what I mean? It was so volatile. It was just back and forth, back and forth, back and forth on this candle for this hourly period. So I was able to win, a short, and then the candle had come down again some more. And so I was like, I think, this was the liquidity grab that I was looking for, where we take this previous high, take the liquidity, and then reject it down. So I took another short position in here. But then during that same hour, the freaking thing started pushing up. And I was like deep in a loss because I wasn't operating with a stop loss, because I was like, no, it'll go back. It'll come back. So I'm like deep in this loss up here. And I'm thinking, oh crap, like maybe the liquidity grab. And actually, here's what happened. So we had a liquidity grab here, right? Then it dumped down and it grabbed liquidity from here and then shot right back up. So basically I was like way up here and I was like, man, is this thing going to come back down? Or so it was almost like a triple liquidity grab. It like went up, took liquidity, came all the way back down, took liquidity, came all the way back up again, took more liquidity, or just if whoever else decided to try again, I don't know. And then so it was literally like a triple. So I ended up taking a loss here because in my head, I'm like, I'm about to blow my account if I don't get out of this trade, especially if it keeps going up. And I just thought to myself, you just got to survive, Tim. Like trading is it's survival. It's keeping your trading account alive until, you hit a winning streak, really. So I literally was just like, okay, Tim, you're about to take a big loss, but is it more important to win this specific trade, or is it more important to keep your trading account alive for just one more day? And I thought to myself and I went, I want to keep my trading account alive for just one more day, because you never know the day that you're going to really have a breakthrough, right? And I think I might have found a little bit of that breakthrough finally, but had I let my account get blown, I wouldn't be alive to see this potential breakthrough I'm looking at and potentially. So that was kind of my mindset. And so again, of course, right after I sold my position, it immediately dumped back down. So I was like, my gosh, if I just held my original short position, like the very first one, if I just held it, set my stop loss, above here somewhere, found like something like this, found the moving average, set it above, and I would have just like washed my hands of the day and just only taken one freaking trade the whole day. Look at that. I would have won this massive trade, this short all the way down. But oh my God, it was absolute. I was like, you know what? Maybe I'm not good enough to be trading on those kind of days. That was so wild. You just get wrecked so easy on that. So yeah, so that was kind of killed my confidence, and then I ended up losing kind of some other trades, and then I had to kind of reassess. I didn't really trade for a couple days, and I just kind of sat and kind of thought, okay, I gotta really start to filter out more the trades that I take. Like I really got to be so disciplined and so like I only do XYZ under like certain rules. And so one of the rules, which I've heard, a lot of people I followed talk about all the time, which I never really followed because I was like, nah, I don't really need to follow that. And it was always you don't short over the 200, you don't sell under the 200. And I kind of always thought like, come on, like, you see so many trade opportunities where you could win a trade even if you take a long under the 200 or a short, or yeah, short over the 200, right? Come on. And now I'm realizing, like, man, like, if I had stuck to that rule since like the first day I ever traded, if I had literally just followed that one rule and just did everything else the same the way I've always done it, there's so many trades I would never have taken. So many trades. I'm probably talking like 50 to 100 trades that would just be like gone. Like I never would have even taken because I would have been like, oh, it's over the 200. Oh, it's under the 200. I can't take it. And if I could take those trades back, I absolutely 100% would in a heartbeat, because I, have lost a lot of money trading over the years. So if I just had eliminated those 50 to 100 trades, maybe even more than that, God, who knows, just by that one rule, I mean, who knows where I'd be right now if I had just followed that one rule. So I am, after sitting down and realizing it, I went, man, I just got to like be okay missing out on trades where, I could take a long under the 200 and it might still be a good trade. And I do think that every once in a while I will take those kind of trades. Kind of like if you saw one of my previous videos, I took that trade where we came down to those massive support levels, right? I think it was like right here, I think. And it was one of these. It was right here where we had come down. I used to have like a really, line here. I took a bunch of stuff off. But I used to have a big resistance line down here. And then also we were kind of at the bottom of our pattern. And so I don't know if you guys saw that trade. I did analysis on it, but I took I took a long and then I took another one. I kind of broke it up because I saw that the support was just way too strong. Ended up winning like a really big trade. So I do think that every once in a while I will take a trade if it's, under or over whatnot. But that's going to be like so infrequent, and I'm going to probably put a rule system in place where I only take that if, I probably need at least minimum 2 to 3 support levels, confluences to take a trade like that. Like I need a horizontal support, I need a pattern support, and then some other shorter term support to even begin to think about taking that trade again. So I've been sticking to that, and I won 2 trades in a row, and I have a lot of trades I haven't taken, which is, I think, also a really, really good thing. That's kind of just part of the way it works with trading. Is it's really a lot about the trades you don't take more than the trades you do take. You just gotta like really learn to like how to filter out the bad trades. So that way you're just left with the good, and then you're left with the profit. Anyway, so I'm trying to really get nitty gritty with my rules and make sure I'm not giving into the FOMO. I'm just taking the smart probability trades. All right, Bitcoin. Let's jump in on the weekly chart here. Thanks, MACD, for not resetting with everything else. Appreciate you. So I'm gonna make me a little smaller because I'm too big right now. That's what she said. Oh no, that doesn't make any sense, because why would she say I'm? He's. Okay. On the weekly chart, as you can see, of course, everyone knows about the falling wedge. Dipped out of it, back in. Fighting with the 200, got rejected from it, but we were holding strong. The NASDAQ over here has been, pretty sharply dropping, right? The DXY pumping like crazy. Look at this. This is I think I had this set up on the 12-hour chart, this trend channel. And dude, we just freaking broke through it. And we're already approaching, guys, we broke the 1618 on the weekly. Like we broke that already. Like, man, like the only oh, there goes my mouse. The only thing that could bring the DXY down anytime soon is this really, really long term, pretty much like this daily trend resistance, right? This is it, man. This is, if it breaks through this, as you can see, we're getting close to it. So that should be a pretty decently strong resistance, I would think. But again, we still have another. That's getting close, around 115. So that is the next sort of, potential rejection of the DXY. It's been a pretty long-term trend resistance there on the DXY. So maybe soon we will see a relief rally on the risk assets if we get a rejection from this long-term trend resistance on the DXY. One can only hope. Looks like we're printing some bearish divergences as well. But again, it just continues to kind of bust through those. It doesn't really it gets overbought and it just ignores it. I don't care. Maybe it'll come down a little bit, reset the RSI, then it's back up. Reset the RSI, back up. Reset the RSI a little bit. So we're up in here again. So you'd think we'll get a little retracement, even down to this resistance level here, just to retest it and then kind of reset the RSI. Maybe, I don't know, or we just go straight up to this old resistance line here. So anyway, all that being said, Bitcoin is holding up surprisingly well. The fact that we've literally, only come down to this level and we continue to chop around. I mean, I am shocked with how strong Bitcoin is, right? Against the NASDAQ, which is dumping, DXY pumping, but Bitcoin just holding strong around that level. Like, I'm proud. I'm like a proud dad of Bitcoin. Like, man, look at my son, like, holding up, dude. Everything else is dumping, and Bitcoin is just holding strong, man. I love it. I love to see it. Kind of makes sense with the pattern that we're in. It's starting to get to that point where it's really going to tighten up. It's really going to, you're not going to see that many big, huge moves anymore because it's too tight in this pattern. And, we're getting down there. Here's did a couple 382 kind of just to, because golden pocket, obviously super important retracement level, right? So from this point, if we take our line here to here, which I did already, you can see that we actually rejected off the 0.5 retracement level right here and have continued down. The target price for that one would be actually at 14,383, would be the 1618 Fibonacci level of that, trend run, essentially. Let's see where the EMAs are at as well. Interesting. Very interesting. So, I mean, we'll see. We'll see, guys. Do I have my special line on here? What happened to my Bitcoin, my special line? No? Oh, getting a buy signal right now. Where's my oh, here we go. I think that's it right there. Yeah, so here we go. So, as you can see, we are getting closer and closer to our long-term resistance Y line here. But again, we still have a little bit to go. So we could end up hitting that 1618 down. Well, actually, no, because 14,000 would take us. That would take us way low. That would take us all the way down here, right? Which, I mean, it can happen, right? Dipped below it there. Dipped below it there. A little dip below there. Yes, I mean, we could definitely see something like that where we get a wick below our line here. So we could end up getting a little wick. That'd be a big wick, though, I will say. To get all the way down to 14 would be a pretty fat wick. So possible, not probable, possible. I've been calling for about, again, this is my little lines here I drew a while ago, getting down to about, 17, maybe, 16, 500. Maybe it dips a little below. Maybe you get about 16,000 on a little dip, right? Before we finally continue our, because we should bottom here in November. That's usually typical with the cycle. I guarantee we'll, even after we get a dip under here and come back up, we'll literally just trade along this line. Like it won't happen like this. It'll happen like this. We'll literally do this. and just kind of hang out around this line, this trend line, for a while, and just do what Bitcoin does during this time period, which is slowly rise, but not make any dramatic moves until we get closer to the halving. And then that's when we see more of that bigger move. And then, sky's the limit at that point. So I do not think it's going to just bust straight up out of that. It's going to putz around on this trend line for a while. Because that's just what it does, guys. This bear market here, you can see we just kind of slowly worked our way up. Bam. This was a COVID crash. It was totally different. You can't really count that one. This one, you can kind of see it came up. And then we kind of putzed around a little bit, made a move. It was kind of slowly grinding before any sort of massive move here. This one popped up, kind of slow grind along, pop up, kind of slow grind. And then the big move, right? So I think we'll see something very similar to this, where it's just like this slow grind up the line. And then once we get close to the halving, bam, that's when we get our big bull run. That's what I think is going to happen. So again, great time to accumulate anytime. But I'm kind of waiting a little bit until it gets down to like right around 17,000. And then I'll probably go in some more. And then I'll maybe set some buy orders in around the 16,000, 16,500, catch like a wick down. Maybe even set them as low as like 15. Just catch that wick if you can. Just accumulate. And then during this whole time, this is when you would just dollar cost average as it's kind of grinding up this line here. And you're good to go, baby. You're good to go. Now so as you can see on the shorter time frame, we actually did break through this symmetrical triangle that we've been forming. That's kind of within we had a broadening wedge, right? And the target for that is actually right here about 20,500, which we almost hit. We're at 20,300. So we actually almost got to that price target, which is also sitting at this zone here of previous, support, previous resistance. So it is likely that we will see some resistance up here, but it's following the pattern. So it's definitely, I kind of missed that, to be honest, but you definitely could have potentially traded this breakout up to about 2025. And then also if you look at it's kind of a pattern within a pattern, because you got the symmetrical triangle, which if we look at the target for that, it's kind of similar. Maybe this one's a little higher than the top of that, where that broadening wedge starts, but so nice bullishness going on. Again, major resistance right here though coming up. We've got 3 combined resistances. Previous resistance box, we'll get the pattern top of that wedge of the move, and then of course we have our long-term resistance here from this trend line. It's not the main trend line. There's obviously this bigger trend line, but this trend line has held us up for quite a while. And you can see kind of a falling wedge within that. So we do have a lot of resistance coming up, so I'm definitely not turning super bullish all of a sudden. The momentum is still down on the longer time frames. But definitely, again, I kind of mad I missed that actually. Now I'm looking at it, I'm like, shoot. Because you would have had the combination of this pattern breakout, and you're like, sweet, I got the confluence with that one, plus our longer term pattern confluence breakout. They're both bullish, right? You got the symmetrical triangle breakout to the upside. You've got the broadening wedge, which has a bullish bias breakout. So I wish I had seen that, because then I would have. This is the short position I won right in there, but I did not. Honestly, I was working all day, so I didn't actually see this move happen. Because what time did this happen at? This happened at 22. Yeah, so I was pretty much working during this whole time. So I did miss this move, unfortunately. But I'm trying to trade more during the actual market hours, as opposed to, you could trade Bitcoin like all day, every day, right? But I try to just stick to some like just a few trading hours a day so I don't overwhelm myself with being on the charts too much. Because then you just start forcing things if you're on the charts that much. So yeah, so you get, like I said, I'm looking for shorts here pretty soon. I don't know how much more this run has in it. DXY has a little more room left before it hits its big point there, but yeah, definitely waiting for it to pump a little bit more and then get in on some shorty shorts potentially. Unless that DXY gets rejected from that resistance, then we could see a breakout from this trend line, right? Because that DXY is going to have to come down quite a bit from that resistance. So I usually trade Bitcoin on the 15-minute time frame most of the time. Seems to be a decent, gives me enough time to do some analysis. But I'm kind of bummed. I'm bummed that I missed this. This would have been, let's see if we would have had, how much confluence we would have had with this guy. So let's go here. So here was the breakout, right about. I probably personally would have waited for the breakout from this top one. Let's say we get this breakout. It's a pretty nice candle. Obviously, the stochastic's not going to really be, stochastic doesn't really help you out when it comes to breakouts because it's always going to show that it's oversold. Nothing you can really do about that. Okay, let's see if we got a little. So as we were breaking out, we did see that volume start to go up quite a bit, quite a steep little volume increase. Right one there, and then, so I think that volume really did validate that move. I think if I was actually on the charts during this time, I might have jumped in on this just because I would have seen two pattern breakouts. I would have seen that volume increase, a couple big bullish candles. The momentum is up on both the short and the momentum actually got up right here. You can see it start to rise. So yeah, shoot, I probably would have tried to get in on this had I been around for the charts, but never know when the moves are going to come. So just is what it is. Dang. Yeah, I'm kind of bummed. And then see if we had anything else here. We had some kind of hidden bullish, right? Because we had this, we've got this, we go up, right? But then this goes down. That's a hidden bullish divergence. Go up again, boom. Then we have again, pretty much almost a flat, maybe slightly higher high, but big higher high. So again, hidden bullish. And then kind of same thing here. Maybe not much of a strong one right there. Not super strong. And then one right here too. I mean, low and flat low and then low and higher. So that's another hidden bullish divergence right there. Where's our oh wow, yeah, it's looking nice, and look at those moving averages looking nice and strong right now. I might even look to maybe take a trade, wait for it to come down to this 21 and look for a 3-line strike or a hammer candle off of this, maybe to ride up one more wave here before. Let's see, where I might already be losing some momentum here. I already got some bearish divergences forming already. So we're already losing a little bit of momentum. Let's see. I've been using the MACD a lot more to see if we can see some trends here. MACD. Made a higher MACD. Okay. That's a good sign. Still some bullish momentum. Okay. Interesting. I've been liking the MACD divergences lately more than the regular RSI divergence. Anyway, let's get to my trades so you guys can see what's going on. So I actually just kind of digested that new Bitcoin stuff. That's why I wasn't talking so much just now, because I'm like, oh man, it's like absorbing some new stuff I hadn't seen today. So this was the Bitcoin trade I took. So here's why I took it. We had a 3-line strike. And I would consider it sort of a 3, because sometimes you get 3-line strikes Like this one, for example, look. But I wouldn't consider that one an engulfing candle because it didn't engulf anything. So that is a weak signal. I want to see a 3-line strike, and I want to see it engulf the previous candles. And so we got both of those. We got 3-line strike, and we got an engulfing. We literally engulfed the previous 3 green candles there. So I also noticed too that we, for a while here, the trend lines were really, together, and then you can see it kind of starts to separate a little bit more, and then you get the 3-line strike. And so that I was like, ooh, I like where those trend lines had kind of, and I was also looking at the MACD because I was seeing the MACD, right? We were kind of consolidating, right? Then you get this big 3-line strike move as the moving averages are kind of giving you a, like, hey, the momentum is moving here, right? These moving averages were kind of all just spaghetti together, and now all of a sudden you're seeing that nice trend forming. And then obviously the MACD is a little bit lagging, but seeing this consolidation, we kind of know, okay, at some point it's gonna move, because we take a break in the market, things kind of close up, and then we get more volatility. So this was kind of a clue of like, okay, more volatility is coming. And then these trend lines were kind of like a, hey, guess what? We're about to trend, think about a move. So then saw a 3-line strike. I didn't have a lot of volume with it, which I was, I like to see those nice like hammer candles with volume. But I thought, based on getting that nice rejection right off the 21, engulfing, we're under the 200, right? Which is the new rule I'm following. Hey, we can take a short here. We're under the 200. MACD seems like, hey, we're going to move soon. I did look on a couple different time frames to kind of make sure that we were also under the 200 on higher time frames, which we were. We were under the 200 on the 15 and the 1 hour. So, okay, cool. We're even bearish on the longer time frames. We did have a recent divergence here. As you can see here, we had the MACD print lower highs while we printed higher highs on the charts. And then we had our down move, and then a rejection off the 200, and then we kind of start the trend, or at least temporarily start a trend. So I kind of use that as like, okay, we just recently kind of basically broke our upwards momentum down, got rejected, and now we're heading down. Of course, we've got this pattern that we're in, and we have more room to the downside of this pattern. And it respects this pattern quite a bit. So I kind of used a lot of confluence on this one. We looked at price action of our pattern and kind of where we think it's going to go based on the fact that it usually respects the pattern boundaries quite a bit. And then we added in the 200. We added in the bearish divergence. We added in being under 200 on multiple time frames. We added, we kind of added all these things together to kind of paint the picture that, hey, we're going to move down to the bottom of our trend line. And that's exactly what we did. So it's able to win this nice little trade right here. I kind of wish I had taken this trade here. I actually really thought about taking this trade here because we had this beautiful looking hammer candle with significant volume, a lot more than the previous candles. We're at this, long-term strong support line. We had an oversold on the 15-minute RSI, as well as a bullish divergence on the 15-minute RSI. So I didn't want to over trade, so I didn't take it. And also it technically wouldn't fit my rule because it would be taking a long under the 200. I did think about breaking that rule for that one because it did look really juicy, but I just decided, no, I think for now I got to stick to my rules, even if it means I miss this trade. So as you can see, since that's happened, we have done really well. So kind of a bummer, but at the same time, I got to be careful about, because, once I break that rule once, then, it's going to be really easy for my mind to be like, oh, well, hey, you did it that one time. It worked out. Why don't you do it again here? Why don't you do it again there? And then pretty soon, next thing you know, I'm right back into my old habits, and I'm taking all these, really low probability long positions under the 200 and then getting burned, and then I'm back to square one. So that's kind of where you have to sort of, as a trader, I guess you got to kind of figure out what's best for you at the moment. And for me, it's like, what's best right now for me is to stick to that rule. even if it means I miss out on trades like this. Now, again, I think in the future I will take this trade just because it did fit a lot of my rules for my I sort of have essentially 3 different trades I'm taking right now. I take hammer candles off of moving averages with volume more than the previous 3. And I try to look for, see if there's like a support or resistance line as well to kind of add to it. And I was able to win one of those recently. My second type of trade I'm taking is this trade right here, a 3-line strike off a moving average, under over the 200 with sort of the moving averages kind of telling me that we're kind of moving into a trend. That's the second type of trade I'll take. The third type of trade I'll take are what I like to call trend continuation trades, which is right here. We hit a long-term pattern, trend, support or resistance. We get some sort of candle formation, either a hammer, bullish engulfing. We get volume, showing that there's a lot of buyers at that level, right? And then, we look for basically a oversold or overbought reading on the RSI, and then we look for a divergence either on the MACD or on the RSI divergence. We look for some sort of divergence, and you can see one kind of already forming here where we had our low on the MACD, and then we were making a higher low, even though we were making a lower low on the chart. So this trade really had everything. I was just kind of afraid of over trading at that point. I'd already won this trade. I was feeling pretty good about it. I've over traded a lot in the past. That's kind of one of my biggest problems. So I decided to let it go and not take it. But obviously, man, that would have worked out pretty well. In fact, let's see. Let me see when that was, right? Was it right here, I think? When was that? I think it was right. Yeah. So had I taken this trade right here, would have, obviously put my stop loss under this wick here. I mean, it would have won for sure, depending on. So that was a potential trade I could have taken. I was looking at it. It didn't quite fit my rules. Obviously there were still trades to take once we did get over the 200, right? I could have taken some sort of trade in here, maybe even this hammer, right there, a nice little hammer off of the 100 and the 50 combined, right? Could have taken that one. So there's still more trades to be had. I just wasn't on the charts during this time. I was working during this whole run basically. So is what it is. Can't be on the charts all the time. But yeah, so trend continuation. So those are like my 3 types of setups I'm basically taking right now. I'm trying not to take anything more until I master those. Now on US 30, I did get a win here, and I do have some signals that kind of help me clue me in. And so I used one of them, and so I got the shoe, which kind of shows that we broke this consolidation range. And you can see by this white line, I kind of drew this trend line because this is kind of our previous, we're kind of consolidating within these 2 lines. And so we got the shoe because we broke out of our consolidation range. Again, we had momentum on the RSI being down. Again, we're under the 200 on the time frame I'm trading on, so sells are okay. We did have a recent rejection from the 200, which you always like to see it. Hey, it came all the way back to the 200, got rejected, which means we've got room to go down. Sometimes when you reject off the 21 and then it's already too late in the move, and then it reverses back and even reverses back to a different moving average line. So I almost kind of like the 200 rejections, because then you have a lot of room for it to go down. Whereas the 21, it sometimes feels like you're kind of already towards the end to an extent, unless you're like at the very beginning of that trend, But anyway, so we have recent rejection of 200. We did get this huge bearish engulfing 3-line strike, engulfed the previous 3. So I technically could have taken just this signal on its own, getting rejected from a trend, recent 200, so this, having this here gave me like more confidence in taking this trade down here, that we should see some significant downside still because of how just engulfing that candle was, and we broke back under all the moving averages. So Then we break from this consolidation range. We were kind of chopping around for a bit. I decided to jump in the trade. I set my stop loss above all the moving averages because I just wanted it to be as safe as possible. And we came up pretty close, right? If I had kept it too short, I would have got stopped out. So luckily kept that. Let's see. We saw that 21. It was kind of started to cross under the 50, which kind of makes those moving averages all line up, which is kind of what I'm looking for nowadays. We had the MACD, which you can't see on here, but it was actually showing some bearish divergences on this move here. And so kind of like same thing on the Bitcoin trade where you see like, okay, our upswing kind of ended off of our, MACD bearish divergence. Now we switch. Now we get, a momentum moving candle in the opposite direction. It was basically the same, almost the same, very similar to the Bitcoin trade I took. Bearish divergence up. Okay, we're probably going to switch. We're going to reverse soon. Get the signal that the reversal is definitely in. And then we catch a trade going down. MACD was also showing me some higher volatility. No, you can't really see that right now. I should have added that to this photo, but it is what it is. And then I looked on the, see if we were under the 50 on the RSI, and on the 5 and 15, we had this red momentum down. So I realized I had this epiphany the other day that the RSI candles are great for showing you if the momentum is bearish or bullish, but they don't do a good job of showing you how much momentum there is. And I realized I was losing trades because I was reading RSI candles as if they were telling me how much momentum there is and not just where the momentum is going to. Because just because we have bullish momentum, it doesn't mean we have very much of it. We have it, we're above the 50 RSI, but there's not that much. So you can't, I realize I can't take the RSI candle sell. It's like, oh, that's great that the momentum is bullish. That's awesome. But how much momentum actually is there? And that's where I'm starting to use the trend line or the moving averages and the MACD to tell me, hey, not only did we switch momentum to bearish, but now, thanks to these trend lines, like the 21 going under the 50 or the MACD showing like a big spike and then coming down, now I know that there's enough momentum in the market to actually cause the bearish momentum to actually make a move. So that was something I was like, light bulb of like, oh man, who cares if it's bullish or bearish? If there's not enough of it to make a move, you're going to lose. So you need both. You need to know where the direction of the momentum and then how much momentum there actually is in the market at that time. So since I combined those, now we get bearish momentum down and I win the trade. So I feel like things they're starting to click, and it's been a long time coming. And who knows, I might go on another losing streak next week and be back to square one. But I feel like my discipline is growing a little bit. I'm starting to, really, really take the under 200 and over 200 seriously, which for years now, I've kind of ignored it. Like, I'm just going to miss too many trade opportunities if I follow that rule. Now I'm like, all right. I'm like the reluctant child who's like, finally, like, the parents been trying to tell him for like years to do something, and then he's like, I don't want to, and then all of a sudden he's like had so much failure to where he's like, all right, mom and dad, like, I'll listen finally. I'll try your thing. Okay, I don't like it, but okay. And then you're like, oh, okay, they were right. Like, I get it. Okay, all right, So I think it's just taken me a while to kind of come to a point to be like, all right, Tim, like, you gotta stick to the rule. You gotta stick to the rule, like, majority of the time. So I'm gonna try to hold to that rule. You guys can hold me to it. And already having good success. Two trades with my new rule, two wins, and then I think a combination because new rule, over under 200, and then the epiphany of the where's the momentum going, how much is there, right? And volume helps with that as well, right? So like that one trade that we were looking at that you could have taken here, not only was the MACD kind of starting to get more volatile, but now the volume is increasing. So the combination of those two things are like a great way to kind of be like, okay, like there's going to be some movement, and now we just want to see, okay, where's the momentum going, right? Now we bust out the RSI candles, because now we want to look at, okay, momentum is bullish. Okay, great. Now we got this volatility. Now we know how much momentum there is. Now we can look to try to take a trade off of, the moving averages. We get above the 200. We start to see the 21 get above. We start to see, the 50, the 100 kind of get above. And that's when you kind of start to, okay, it's time to take a trade. That is all I got for you guys on this episode. There's a chance you may not hear from me for a while. We have a hurricane thing coming in. It's supposed to hit Wednesday, so I might be able to crank out one more video Tuesday night if it hasn't already sort of come early. But there's a chance we'll lose power for a couple days. So decent chance that, well, you might not hear from me for however long we go without power. So I'm pretty bummed about it, because if there's no power, then there's going to be no internet. And without internet, I can't really trade. I don't really have a hotspot on my phone, although I might need to invest in that eventually. Living in Florida with the internet outages fairly frequently with all the storms. So, hopefully you'll see me in a few days, and I will be healthy and not, harmed by the storm. Guys, as always, make sure to save your money, grow your money, buy some Bitcoin, because we all know that dirty, dirty fiat currency. It's going to zero at some point. They're gonna keep printing. It's too late. We're in a debt-based system. Opt out. Buy a currency that there can never be made more of, ever, and it can be digitally stored, and you can have control over it. It's beautiful. I was just thinking today about, let's say the storm just wiped out my entire, just hypothetically, storm wipes out this entire apartment. It's gone. All right, I lose everything. All right, I lose my laptop. I lose it all. Well, guess what? I would not lose any of my crypto, because all of it is stored on my wallets in the blockchain. And so I literally could just, get a new computer or go to the library, and I could use my, because I have my, I know my seed phrase. I could type in my seed phrase, get access to my wallet, and I've got access to all of my crypto. So it kind of gave me a peace of mind today, going like, man, even if, it would suck. Obviously, I'd lose like a lot of stuff that I'd have to, I'm an actor, so I need a lot of clothes. I'd have to re-get a lot of clothes, which would suck. Not gonna lie, it'd cost me a lot of money. So a lot of things would still suck, but at the very least, my money in crypto would be safe. So that was kind of a comforting thought. Yeah, that's all I got for you guys. I'll see you on the next one.